If you look at the overall money supply or bank deposits in the United States this year, they are actually flat using the money supply growth rate, which is, maybe 7% per year on average. It spiked over 25% during the peak of the 2020 and 2021 stimulus, but now it is essentially running at 0%. This makes for a challenging climate for Bitcoin and other assets in the ecosystem because everything is viewed as potentially risky or speculative in some way. The sector, and specifically Bitcoin, and we'll see what happens with other projects, I believe, will eventually reach a point where the Fed is unable to continue tightening, and you kind of have that shift in liquidity. I believe that presents them with an additional chance to gain an advantage. In a recent interview with Cointelegraph, macro expert Lyn Alden discussed the direction the U.S. Federal Reserve is taking and how that may impact Bitcoin and other cryptocurrencies. We have seen a great deal of market volatility over the past few months as a result of the central bank's struggle to reduce inflation. According to Lyn Alden, there are a number of reasons why it might still be too early to predict a Fed pivot. However, the macro expert thinks it will happen eventually, and when it does, risky assets like Bitcoin will profit enormously. According to Alden, this may even signal the start of the next Bitcoin bull run. As of the time of publication, Bitcoin has recovered some of its prior losses and is once again trading above $19,000. The cryptocurrency value temporarily fell below $19,000 on Wednesday, reaching a low of $18,563. That represented the lowest cost since June 18th. And it raised some concerns that it would experience yet another decline to $17,500, but on Thursday, it rose back above $19,000 again. Despite the recent gains, Bitcoin is still down more than 70% from its all-time high, and the ongoing global economic downturn is still anticipated to have a significant impact on its price. Lyn Alden talks about the effects of the Fed's tightening policies on Bitcoin and the rest of the cryptocurrency space in our interview. Do watch, like, and spread around this video. Make sure to subscribe for more videos like this and to leave your thoughts and observations in the section below. Gratitude and good viewing. So in the long run, I don't think the Fed will be able to normalize interest rates, to put it another way. What I mean by normalize is that when you look back at history, interest rates were frequently higher than the rate of inflation that was in effect because you would receive interest on your treasury securities or bank deposits at a rate that was greater than the headline CPI. And while that has occasionally been the case over the past 10 years, for the vast majority of that time, we have seen a negative interest rate environment. And of course, with industry-specific inflation this high when overall inflation is still rather low, you know that we'll see some fairly severe numbers here in 2022. They're going to tighten policies as a result, you know. The largest problem, in my opinion, is that, due to the system's high level of debt, they won't be able to normalize policy, that is, return to a time of structurally positive rates. Therefore, the combined public and private debt in the U.S. is almost 370% of GDP. Additionally, you have comparable high numbers in Japan and Europe. Right, so many of the large industrialized nations are unable to reach positive rates and keep them there. And if that's true, which I believe it is, then the long-term outlook is bullish for more scarce assets, which would include, particular types of equities and things like that, as well as, Bitcoin and any other project that is expected to endure and grow for a considerable amount of time. The broad money supply in the United States this year, or bank deposits this year, for instance, are really flat year to date in 2022 if you look at them in the short term. Ironically, the dollar has experienced less inflation than Bitcoin over the course of, say, an 8-month period. And of course, that dramatically departs from the regular trend, which uses money supply growth to measure inflation, which is, say, 7% annually on average. However, I believe that eventually, when the Fed reaches a point where it is unable to continue tightening and there is a shift in liquidity, the market in general, and Bitcoin in particular, as well as other projects, we'll see what happens to them, will have another chance to succeed, though it may take some time to get there. Therefore, I believe that there are a few things to look for in tandem. The Purchasing Managers Index, PMI, which is a measure of whether an economy is growing or decelerating, is one thing I like to draw attention to. Therefore, if the number is above 50, it indicates that the plant is growing. If the number is 55 or 60, it indicates that the plant is expanding swiftly. And if it falls below 50, it is contracting. And if it falls below 45, it is shrinking quite dramatically. And because it appears to be a sine wave moving across, most PMI cycles for most nations have a duration of about 3 years. And if you plot the price of Bitcoin against the US PMI, you'll find a fairly good association between rising PMI environments and active periods of economic expansion. When that happens, the price of Bitcoin is rising. A dropping PMI is typically accompanied by weaker or flat-out plummeting Bitcoin prices. Naturally, there is substantial connection throughout the entire market for digital assets. Therefore, if you take the 2017 bull run as an example, you can see that the Fed was tightening policy and hiking rates throughout the entire period, but they were doing it at a time when PMIs were climbing sharply. Therefore, you have, fiscal stimulation coming from unfunded tax cuts. The Fed was then seeking to tighten policy, as you may know. And that was it. It posed a serious environmental risk. Thus, Bitcoin and emerging markets both performed well. Despite the Fed tightening, cryptos, the stock market in general, and pretty much all risk assets performed well because the Fed tightened in a way that made logical in relation to that economic cycle. By, let's say, late 2018, they encountered a problem when the economy tanked. They continued to tighten. They encountered turbulence at that point. Finally, they were forced to stop. And what we're seeing right now is something similar, although farther back in time, where they didn't even begin tightening until we had already had the rollover in the PMI. They are now tightening policies in light of the weakening economy. And I believe that is the dangerous mix. It's pretty difficult to achieve a large and prolonged surge in Bitcoin and the rest of the space until that situation changes, The Fed is determined to shrink its $9 trillion balance sheet in addition to boosting interest rates. It is essentially squeezing out a lot of market liquidity while simultaneously hiking borrowing prices at a time when inflation is still near 40-year highs. Any asset will not prosper in this atmosphere, and Bitcoin is no exception. But the Federal Reserve must eventually realize that it cannot continue to tighten, and it will start to loosen up a bit to prevent the recession from turning into a full-blown depression. Returning to Lynn Alden's conversation, she covers the function of Bitcoin as an inflation hedge. In general, there has been a fairly high link between the price of Bitcoin and the rise of the overall money supply over the last, 3 cycles. Bitcoin behaves precisely as you would anticipate it to if the expansion of the dollar were to be faster than usual. As a rare asset, Bitcoin often performs admirably. However, in 2020 and 2021, when the money supply grew at its quickest rate in decades, it outperformed most other risk assets. And the increase of the money supply in the United States has completely stopped this year to date. It is therefore not surprising that we experienced a rollover in assets that are essentially promoting themselves as being in high demand and resistant to inflation. The problem is that the actual price increases we are witnessing, particularly in the energy sector, occur with a delay after the expansion of the money supply. Therefore, before all these price consequences occurred, a lot of financial assets felt the effects of that increase in the money supply. These pricing effects are now becoming apparent. So why didn't Bitcoin shield me from inflation? Many wondered. The two most important ones are one that it already completed. Simply put, Bitcoin was reacting to what happened in the core that caused inflation a year or two ago. Another problem, in my opinion, is that the word hedge generally refers to paying off at a precise moment when something occurs. Therefore, if you short a stock and the stock market declines, it will pay you at that precise moment. You see, when it comes to inflation, the investments that typically pay off the most in the short term are ownership stakes in the things that are causing that inflation, which is typically energy and assets that are tied to the energy industry. Because they will increase precisely when inflation is occurring, those are typically the best forms of hedges against inflation you can obtain. because you're really investing in a long-term scarce asset versus an asset that has historically grown, and when we speak about the dollar, we're talking about at 7%. A year or more, Bitcoin is more like long-term protection from inflation, in my opinion. The European Central Bank has announced the largest interest rate increase in its history. The central bank increased its benchmark rate by 75 basis points on Thursday, in line with the Federal Reserve's increases in June and July, according to reports. On Wednesday, the Bank of Canada also disclosed a comparable jumbo interest rate increase. The bank's rate at the start of the year was 0.25%. Following a 75 basis point increase on Wednesday, it is now at 3.25%, the highest level since early 2008. The Federal Reserve is reportedly planning to raise interest rates by 75 basis points for a third consecutive meeting. A number of other nations, including Japan, South Korea, the UK, and others, are either considering or doing similar actions to reduce inflation. What does this entail for Bitcoin and other digital assets, in your opinion? Please leave both your remarks and your replies. I'm Len Aldens, and you may contact me in the comments section. Make sure to subscribe and press the like button for more videos like this. To remain current on market movements, you may also watch our other films connected to cryptocurrencies. I appreciate you coming.